This video we're talking about finding the drawing liquidity and timing the market, right? In this raw video, I'm talking about two tips I'm gonna give you guys. One is finding drawing liquidity, and second is what? Timing the market, right? So what is the drawing liquidity, right? Basically, drawing liquidity means what's the objective of the market? You gotta think outside the box because drawing liquidity is not a building block. It's not a block. It's not a auto block, breakup block. It's not none of that. It's just a word. Basically means another word for what's the objective of the market. Basically, drawing liquidity basically means what is the objective of the market. If you could find a drawing liquidity easy, right? This will help. This tip I'm telling you guys will help you guys better understand the market and not get manipulated too much, right? But what is liquidity, right? What does the market move on? The market, in my perspective, is fair value gaps and the buy side, sell side, daily lows, daily highs, 4 hour lows, 4 hour highs, recent session lows, recent session highs, trending lows, trending highs, right? Those are basically the liquidity for me. Which one do I use mostly is recent session lows, recent session highs, 4 hour highs, 4 hour lows, and the last thing is trending lows, trending highs, right? And another one is equal lows, equal highs. They're known as liquidity, right? And fair value gaps. That these one I just mentioned, fair value gaps, equal lows, equal highs, recent session lows, recent session highs, and 4 hour lows, 4 hour highs, and trending liquidity, right? Basically, when a market creates a trending liquidity, basically means where there's a high or a low. There's a vice versa, right? Where there's a high over here, and the market creates a trending low. So like it's gonna be like this, right? So the market, let's just say there's a high, right? And the market creates another high, but there's a lower high, lower high, lower high. So the market creates a trend to the downside like this, right? And then eventually the market can be like there right there. There are a lot of liquidity. So the market's gonna go like boom, take out all the, you know, stop loss. Take out all the liquidity from there. Take out all the stop losses from there, right? Just like today that happened on another session. So you can see my live stream. This all raw video, by the way. There's no editing, no cupcat, no nothing like that. All raw. If you see my video today from, I think it was 7/2/2024 for my lending session video, right? My lending session trade, not trade, I mean market, right? Where the market created trending low, trading liquidity, basically where high, lower high, lower high, lower high. Basically, the market took out the whole thing with a big move, and in that live stream, I even said that in the lower time frame too, where it created a low, where it created a low, higher low, higher low, higher low. Eventually, the market, I'll show you the example as well. The market just came back, took out all the liquidity from there, right? And yeah, that's basically a trading low. Finding drawing liquidity was always gonna give you a advantage in the market. So if the market took out liquidity, meaning took out a resistance low, resistance high, daily low, daily highs, equal lows, equal highs, trading lows, trading highs, right? Trend line highs, trending lows, right? If the market took that out, you're always in the right spot, you know what I'm saying? Or if the market retreats to a fair value gap, basically my whole concept is basically out of a liquidity, basically fair value gaps and liquidity. Buy side, sell side, equal lows, equal highs, just equal buy side, sell side, the same thing, but there are different variants of it, like with the recent session low, recent session high. Not a random, you know, liquidity. Meaning, the one I use basically is an hourly time frame and above, but mainly the recent session lows and highs, and equal lows, equal highs, trading lows, trend line lows, trend line highs, right? That and 4 hour lows, 4 hour highs, right? You could use a daily as well, right? But if the market took out liquidity from the downside, you will always be in the right. You will be right because what did the market do? Took out liquidity, basically took out sell stops, right? Then now, vice versa, by the way. But now the market might push up higher, so that means you're always in the right spot because if the market took out liquidity, right? You're always in the right spot. You'll be less chance of you getting manipulation, but if the market before the market goes up or low, depending on if you took out the buy side or sell side, you have to have a confirmation where I have a 5 minute building block, 5 minute breakup structure, a 5 minute buy pattern, sell pattern, right? But here's the one thing I don't use, right? I don't use order blocks. I don't use breakup blocks. I do use support resistance, right? I do use all of these, right? I do use it, right? But I use it. I don't use it in a main confluence. So when I'm entering a trade, I use order blocks. I use breakup blocks. I use fair value gaps. I use sell side sweep. You know, whatever you can name, right? I use it. I use support resistance. I use it. I use buy pattern, sell pattern. I use it, right? But when I don't, when so I use them for entries, right? Entry execution, but I do not use them as a main confluence. Basically, meaning, that main confluence, like the hourly time frame confluence, where I looked at with that move, where that drawn liquidity, I feel like where that building block, I think is gonna be the move that's gonna cause the market to go up or down. It's gonna be the main move, right? I don't use it as that, but I do use it as execution, basically, to enter the trade. I use it as a confluence to enter the trade, right? As a confirmation confluence, but as a main confluence, as a, you know, where I think after right when touches this, the market should go my way. No, when things like that, I don't use order blocks. I don't use breakup blocks. I do not use support and resistance. The only thing I use is provide gaps and liquidity. Buy sell side. You know what I'm saying? As I mentioned before, and yeah, the second tip, if you can find these, if you can find a drawn liquidity, you're always gonna be in the right step of the market, right? You're always gonna be ahead. You are always gonna have a less chance of getting manipulated, right? But as I said, you gotta know that the market has manipulation as well. So where the provide gap will get manipulated, and there's ways you could, you know, I made a video on that as well on my TikTok, but yeah, where the market just doesn't provide gap, it gets a small fill, it doesn't get a good fill, right? Where the market goes up, goes out back down, but the market comes right back up, takes out more liquidity before proceeding to go back down, right? Just like that, vice versa, right? And that's a market manipulation for provide gaps. But I usually like to use more of a, sweep of a low or sweep of a high, or sweep of anything I mentioned, right? Because what is stronger, liquidity or fair value gaps, right? Imbalances or liquidity. Liquidity is stronger, right? So basically, that's why I could use more of a liquidity. But when I do use my fair value gaps, it's always in a higher time frame, like 30-minute or hourly time frame. In a 30-minute time frame, it has to be in a trendy way. The market has to be in a trendy position. The market cannot consolidate. The market has to go up or down, right? Let's just say the market is going down, right, but the market just reverts back to the upside. I will not use it. I would just trending highs or trending lows, right? That, and the second tip I'm gonna talk about is timing the market. You know, know know what I'm saying. Know when to get into the market, know when to get out of the market, right? Basically, where you have specific hours to trade. Basically, meaning I have 3 hours in London session to trade, where it's from 2 a.m. to 3 from 2 a.m. to 5 a.m. Only have those 3 hours to place a trade. If I don't see a trade after that, I'm not gonna enter. In New York, it's from 8 a.m. to 11:30 a.m. right? After that, I'm not looking for no other entries, right? Even if I get an entry right after that, right after like 11:31, I'm not gonna enter that just because it's past my trading time. And I trade agent session as well. So from agent session, it's usually I feel like after 11 a.m. or right on the 12 o'clock. I don't trade. I don't trade a what do you call it? I don't trade Asian no more. I do trade Asian session. I just I don't put I don't live streaming just because, I'm busy that time, and yeah, so that's just because of that. But I do live stream London and New York. But if you can use these two tips I just told you in your advantage, you will always be you. This will increase your chances of becoming a profitable trader, where, as I said, find a drawn liquidity and timing the market. Do not, as I said, look, it doesn't make sense, right? Let's just say the market, let's just say it's 7 a.m., right? New York has 1 hour till open. Why would you want to trade there? Because the market could just disrespect you. let's just say you are right, right? Let's just say you're right. So let's just say you entered at 7 a.m. right? As an example, you could do any time, but I usually like to enter trades at the kill zones, where mainly forex kill zones, not indices kill zones, forex kill zones, right? Where let's just say you're right on that trade, right? Let's just say at 7 a.m. you enter the trade, you're bullish, you're right, you got every conflict is done, but the market just goes up, comes back down, goes back, comes back down. Eventually, wicks you out of the market wicks you out of the trade, then goes right back to your way. But right when New York comes in, just starts going to your way, right? So this is what I mean, timing the market, know when to get out of the market. You know what I'm saying? After the 2 hours, 3 hours, if you don't see no setup, get out of the market. It's not worth it. Just wait till next day, wait till next session. You know, these tips should definitely help you out. And yeah, this is my video for today. Finding the drawing liquidity and timing the market. If you could do these, you are always gonna be a step closer to becoming a profitable trader.